It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. This is the 3 p.m. edition. I wanted to do a lot of calls and a lot of questions, and I do have the time. I wanted to be here at 3 today, and, of course, to be able to reach those California folks, those folks in San Francisco, to let them know that on Wednesday, 6 o'clock till 8, California time, that is, at the Marriott Marquis in San Francisco. I think that's 55 4th Street. Check it out. Go to the front page of TFNN. I'll be giving a presentation, a workshop, a meeting. I just want to know who's there and say hi to all our California friends who are able to make it. I believe there are people that are actually coming in from other states. That'll be very nice. So I'm really looking forward to being able to meet with you, to talk to you about the tide, how I consider the tide to be so important, and that is the tide of the market. If you're able to identify certain characteristics, it can really help you. It's not to say it's perfect, because when you are changing from one direction to the other, obviously you're going to have some difficulty in that moment unless you have a number of indicators. Sometimes you need one, sometimes you just need a plethora of indicators to say, this is what's happening, and if such and such goes, these are the levels to watch. We will be under pressure. If such and such stays in place, we'll be working towards the upside. And one of the things I look for, I didn't have a chance to talk very much about it. I did mention it to my subscribers this morning. There are two things that are going on. One is that the volatility index, which I've looked at as it's really the key. You want a key. Everyone talks about looking for this golden fleece or whatever it is. Well, you can get fleeced if you don't find the right key. And I believe that the key that is really, it has been a tremendous help to me for at least 2 to 3 years now. Well, for decades, but for 2 to 3 years, it's really been important. And that is right here, when I show my subscribers to my opening call, my daily newsletter. That volatility index made a peak in the 120-minute chart at 15.65 on Friday. On Friday, 6, 7, 8, yep. But look at this. If I go to this particular chart right here, that's the daily chart. And the daily chart says, hey. Don't get too excited. Look, it's making a potential bowl, not a cup, but a bowl, flattish bowl formation. But it means absolutely nothing unless that volatility index, which is trading at 13.57, down 35 cents right now, is able to clear decisively. Now it's not just 1585, the 200-period exponential moving average. Let me just go to my charts. I want to see if everything's showing up nicely. Right there. Yes, that particular chart. This is a daily chart. Let me move this out the way. It's a 120-minute chart. Right. So that daily chart there is telling us that level to watch right there, 200-period exponential moving average, as long as, I'm watching that mouse flying around. All right, there it's stabilized. Good. That 200-period exponential moving average, the moment the VIX crosses and goes into the 16s, what's the next level that's going to be the challenge? 19.28. I'll type that in, 19.28. So what we've got here is kind of two cups with a lower low of 11. What was the low just recently? 11.05. Let me type that in, 11.05. And the upper parameter is 19.28 and then 23.23. So wait a minute. A very easy thing to do is to take a trend line and you can go whoosh all the way down. And now we have even greater clarity. We know that trend line resistance continues to be resistance until the price decisively moves above and treats that resistance as a support. Now, what's interesting about this particular chart is that not only do you have two, but now you've got 3 points of reference, and it says if the high of 16.82, the high of the 1st of March, is able to be cleared by the volatility index, then there's a really good chance that it'll have the opportunity to go back to at least close to the 18s to the 1928 level. And then all of a sudden you can get rid of this trend line, and I would be drawing in, let me do it right now, I'd be drawing in a left side, right side, price time match. Well, what is it? What is all that? Left side, right side, price time match. Well, what it is, it's a very simple technique. It's a technique of identifying important left side when you're looking at the cliff of this Grand Canyon slide down. Obviously, there is no ledge from which you can get a stable footing. It just goes straight down. So you have to draw one that is based on this midpoint, potential midpoint of 1928 at 4:15 in the afternoon on the 25th of February in the VIX index. Hey, wait a minute. That says it can go to where? That it goes to the 17th of April, was a daily chart, the 17th of April, to take that out if there's a left side, right side price time match. Well, this flattening out over here says, oh man, you've only had one momentary spike to the upside, but look how much time you've spent here. It's like, that's the magnet. The magnet is the 1350s to the 1330s. So let's just put this in perspective. At this particular point, the Dow is up 8. Oh, let me give you the numbers. The Dow is up 8 at 14,573. Earlier in the day when I was on at 11 o'clock, the Dow was down about 40, I think it was. And the S&P was down less. And to me, that was good because 500 stocks obviously would outweigh 30 stocks. The S&P is up 4 at 50.57. The comp index is now up 9. And earlier Apple was up 1.5. It's now jumped. It's up $1.90. Apple on its way. It's at 42.07 on its way to 42.507 on its way to 42.533. All right. So we've got the volatility index, and I'd like to do this just for a moment to go to the black charts. I love the black charts. So I was asked earlier in the day if I'd look at Doug, D-U-G. I think that was actually for Doug, D-O-U-G. But I will do that in a moment. Let me just write that down because you know by the time I get going here, I'm going to forget. So Doug for Doug. And I'll get to that in a moment. So 877-927-6648 is the number to call. And let me just go back to the story here. So now you can see on the black background charts, because I want you to see something that makes it so clear. Here is the monthly. I'm skipping the weekly for the moment because the week has just barely begun. And I will get to the questions in the den. I will get to all the questions. I think we'll have time. Look at this. You see that blue line that I drew in years ago? I don't mean years ago. I mean years ago, decades ago, 1996. I've been extending this out, this blue channel line, down in the 16, probably, yeah, let's call it 16 to 10 area of the volatility index in the monthly chart. And look how many times it's gone to a peak D or F. October 1998, October 1997, at 38.20, plunges down right there. And then it makes a right arm extension road wave up to the October 1998 high of 45.74. You know what the high was for the Dow and the volatility index? 75, October the 19th, 1987. So now look what's going on. I got a left side, right side price time match in the break. I'm going to actually put up my CD to show. I'll set it up so that you can see what I'm talking about. And what happens? It does another peak, A, B, C, D. It goes to a high of 45.08. Then and that was right there in 2002. Then it plunges. It plunges all the way down to 9.939, a low, December of 2006, and then it goes peak. A, B, C, D, 89.53, plunges down to 1570. That was the Greek crisis. The bank crisis was the high of October of 2008. Oh, you get a bank crisis in May of 2010. There's an Eiffel Tower formation. Then you get a S&P downgrade budget crisis. Unbelievable. 48 round number high, August of 2011. European crisis, Greek crisis, fiscal cliff. And they keep getting lower and lower and lower. And all of a sudden, we're looking at the volatility index going down to 1105. And that's that. Look, there's that long-term rectangle. Just, it's amazing that we could be here under all these conditions, and we keep saying, what's going on here? Look at the unemployment rate and the this and the that and the that and the this. Meantime, the market has its own velocity. So let's do this. It's right now at 13.57 in the monthly chart. The moment that the monthly chart sees a break above 19.28 that was made in February of this year, then the 21.28 level will be really important. That's the 200 period exponential moving average. The reason why I want you to look at this chart, look, make it real easy. We have got, you see the red line and the yellow line of the MACD, the moving average convergence divergence. Look, you've got a slightly rising divergence, but flat at 15.57 in the stochastic. The price cannot get a move up until that fast moving average spirals above the red line to make a wide beta, a wide distance between the two. We're going to have a chance to look at consolidations be fairly mild. I would even put the chances of a 10 to 12% correction as taking the volatility index into the 20s, but maybe not much higher for this particular move. So that's very interesting. So now we had questions. The first question was DUG, DUG, which is the 200% ultra short oil and gas ProShares. Don't forget, folks, you can get anything you want on ProShares right there at TFNN front page. Now, look, here's the DUG with a white background because I've got that notated. Wow, I used to have them all notated everywhere. This is peak B. And my suspicion from the chart formation that's unfolding right now, that unless the DUG is able to punch over 18.18, the high of Friday, and then start testing the 18.71 area, I don't think that it's doing anything other than go sideways. And if you look at the DIG, that seems to be confirming it, that there's a rectangle formation that's going on. You've made a peak E-top. And now what we're looking at, I better draw this just before the break comes up, is that you've got a rectangle formation, and until you break decisively above 57 or under 50, this is going to be the trading range for a little while longer. I'll be right back. Basil Chapman, 3 o'clock to 4 o'clock. This is the Tiger Technicians Hour.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. So, as far as the DUG is concerned, DUG, I suspect, yes, this is a peak B. The depth of each decline after it makes a peak, it really worries me. I think this is, if you look at the weekly chart, I think that the DIG is going to hold okay up here. It's real easy because if the DIG, which is the Ultra Oil and Gas Pro Shares long side, 200% long, there are two Roman candles. One is from the week of the 1st of March, and the other with a long wick and a big body is the 5th of April. And it's trading above. You know, maybe, yeah, it's the monthly chart that says there's a good chance that it's going to make leg D up if it doesn't make leg C this month above 56.68. There's a good chance it's going to extend this month if it doesn't take out 50.53. So, okay, now the question is, DUG, is it a trade? DUG. I'm going to make it easy. DUG, I would rather buy strength than weakness. I don't want it to break under 1729. It's trading at 1747. Of course, it's going to listen to me, right? Well, all you can do is watch the chart. But I tell you this, that if it gets over the bar of the 4th, above 1788, there's a really good chance it's going to go above 1818. So watch the DIG to pull back. Watch the DUG. Now, the question is, why not start a little nibble here? Because the weekly is starting to improve. Well, I would not disagree. If you were going to buy, say, 100 shares, I'd maybe start with 10 or 15. I just get a feel for it right here. I really would buy it into the 1775, but preferably above 1788, even though you're giving up a chunk, because it could maybe go to leg C at 1819, 1 penny above, and then have another sharp pullback. But the big thing is I don't at this particular point see a very big move to the upside. Nice percentage, but not a big move. The big move would be if it decisively takes out 1871. Yes, 1871, the high of the 26th of February. So is there a trade? I would tiptoe in. I would rather add on strength, and then there will be a trade. Is there a trade right at this very minute? The only thing I would say to you is, if you want to take a small position now, Doug, on DUG, I'd be thinking about that. So that's what I just want to tell you. Now, another question is, the YCS, I was asked about YCS. Oh, I haven't got this notated. Let me just see if I've got it on the black chart. Sorry to be jumping around like this. As you know, I have them somewhere in the black charts, but it's on a different system within the system, and I'm not able to get that. By now, I don't really want it because I've done so much work on the new ones. Okay, I've got it, no problem. So that is 1930. So this is leg D up. Whoa, that is an incredible move. That corresponds, of course, to the USD JPY. So let me tell you what we're looking at. We're looking at the ProShares ultra short yen. And the yen right now, if you look at the USD JPY currency pair, is exactly the same, except I have different peaks. And I'm in leg F slash, let me call it F slash B. So F slash B, is there, the only thing to ask, is there now a sign that this is the extension of basically a single leg up, even though I've got it as D to A or D slash A? And all I can say is that when a currency trend starts to accelerate sharply, it is shocking sometimes just how far that extension can go, up or down. So I would not be stepping in the way of this. I think that the YCS is still the way to go. Now, all I would say is that if the YCS trading right now at 65.33, up 1.94%, breaks above 3.05 plus there. So that's 57. No, that's 6 something. Okay, so that's, I've got it. All right. It was there all the time, just hidden. So that was D, that was E. So we've got it down, and we've got it there. This is a brand new move to the upside. Here we go. So I'm fine. I'm okay. Here we go. A, B, C. I'm calling this D. It corresponds to the USD JPY as well, the currency pair. So in other words, strong here is actually a weaker currency. So what I'm looking at is that there's a chance that if by today's Monday, if by tomorrow, the latest Wednesday, this is not turned around and taken out Friday's low, 61.73, but instead is holding above 66.08 to 65.31. I'll be watching for a doji candle to see what kind of reversal could take place. Acting very well. I'll be back and we'll look at VSI when I...
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Now, let me just go through a couple of things. I'm looking at VSI, which is Vitamin Shop Inc. I remember this really well. In fact, it's funny. I have a picture of this in my mind. I remember discovering it once, and my wife and I were in this little antique shop in Newport, Rhode Island. Now, I'm not sure if it was last year or the year before. I think it was actually, something tells me it was 2 years ago. So it wasn't 2012, it was 2011. And I was watching this really closely because it had gone by the screen. And I'm not sure they've changed the symbol or not, VSI. But it might have had a different symbol. But I remember Vitamin Shop. And I remember looking at it and I thought, gee, that's the old English spelling, shop, S-H-O-P-P-E. So it had gone by a ticker that morning in Bloomberg, and I thought on CNBC, and I thought I'd follow it while I was walking around these shops. And it had made in the monthly chart an instant restart. So this strikes me as something that's quite important. So the question is, in the den, the question was, in fact, Zip asked, Basil, could you give an opinion on VSI? I don't have any position, thinking of a possible short. Well, I agree with you in your thinking, but everything technically says it's kind of washed out on the downside. It's at 49.06. VSI is the symbol. I would not be surprised, based on the 120-minute chart strength that I'm seeing and the 2 days of Friday and Monday today, that it is at 49.06, that it doesn't try for 51, around about the high of, it's 52, 51.5 to 52, maybe 52.70, the high of the 15th of March. And that depends on two things. If in the next 3 days, all it does is it has a pullback, and that pullback doesn't take out today's low of 47.55. Actually, I don't even want to see that. If it doesn't take out 47.90, but instead it has another leg, I'd prefer if it had a peak A, and then it actually had a very strong leg B, because the B would say, aha, now I'm building momentum. I can go from under 18% in the stochastic to over 20%. And this MACD, which is flat, is starting to improve. And the weekly chart with the Roman candle doji of last week says, yeah, there's a good chance at some point I'm going to test 46.70. If I break 46.70, 8.70, somewhere around there, I'm going down to retest the low of 45.90. But in the meantime, it's had successively a horrible candle from the doji high in the weekly at 65.93. Now, that was leg F and a peak F. And I suspect that this is, in fact, making a longer-term top, a hat-trick top, monthly, weekly, daily. But in the meantime, I'm looking to see a bounce. So here's my recommendation. I agree with you in your concept that everything about it looks very poor. Oh, you haven't said that, but I'm pretty sure that's what you would say, because that's what's showing up here. But in the meantime, I'd allow this here's another thing. I didn't get a chance to talk about it this morning. I will talk about it because I was asked about it again. About channels, very narrow channels, descending channels, that are capable quickly of breaking out to the upside, and there it is. The reason I wanted to talk about it, because these patterns repeat very often. Now look at this. Here's the GLD weekly chart. The reason why I showed this, I did. I spoke about it this morning. I said that this channel, which is a rather narrow channel, if you're looking at the overall price of GLD, with its whipsaws and all that, up and down, if the GLD at any point in the next couple of weeks is able to decisively break above 158, that's going to be really positive. On the other hand, this channel says be careful, because if you break under 149, that 143 area is going to be next. And 140.24 is, in fact, the 200-period exponential moving average. So let's go to VSI. What would I do? I'd, in fact, not look to short. If you want to short, then you have to hold off. If you want to trade this, I'd be inclined to just nibble on a position here, a little trading position, or you can wait, a trading position right here, between here at 49.09 and 48.23. And at that point, if it holds, there should be another pop-up. And that rally is the one that you want to watch to see deterioration in the technicals. Because the weekly is terrible, monthly is terrible, but I'm anticipating some kind of a bounce. So what, if it's an 8% to 10% bounce, that's 4 points, 5 points. So I was going to suggest you take a small position here as a long. You have a very tight trading stop. And if it gets to 50.79, you raise the stop, so you're guaranteed to make money, and you got a little bit of extra cash for security when you come down to the short side. I would hold off. I'm going to draw this pattern right now that I'm anticipating, and it'll look something like this, with price going up like that, and that falling axe, the inverted falling axe, says right there is what you're looking at. At any point after the rally finishes, if it takes at 48.80 to 48.30, it's going to go back and retest the low of 45.90. And that will be the test for the weekly and the monthly. But right now, I see a bit of an upside move. I would not be shorting it. So I hope that helps you. Now, a question that there was that a question? USD oh no, that's Great British Pound USD. Is that a question? I'm not sure. So US. Oh, come on. Great British GBP USD. There it is. Oh, okay. I've got it in white here. Look, there it is. USG, PUSD. There it is. And it's making a peak C here. It's in an uptrend. It's making higher highs and higher lows. And you're going to watch this because there's the terrible, terrible resistance that it has to break. It's going to be so tough for it to close above it and holds more than, well, it did it once last week. So that means, okay, now it's becoming pierced a couple of times. And that's 1.53 is the 9-period moving average in the Great British Pound US dollar currency pair. But this has to be a counter-trend trade. But in the meantime, back at the ranch, I call the daily still in an uptrend. So we'll be watching it closely. Let's look at the dollar DXY. Had another question in the den. Yeah, that pound is just making this oval pattern. I think the pound will actually make a leg D up above 83.49. The currency index, the dollar index, is at 82.75, down up 0.26. So that is what I want to look at. And then there was one other question in the den. Let's see. HBS, I got that. Yeah, this is interesting. It was brought to my attention about, well, a long time ago, but then again last week, maybe 2 weeks ago. EDV is the Vanguard extended duration. So it's like a bond. And what it did is it made 107. Remember, I love to look at round numbers, so especially at lows and highs. So it makes 107 beautiful doji candle low on the 8th of March, 107 low, 108 high of that same bar. Then it goes peak A, B, C, D, and now it spirals to what? A doji candle round number high of 119 on Friday the 5th of April. And now it's pulling back. So this is a very strong move. And it says, yeah, it's pulling back, but you better watch the 200-period moving average at 114.64, because if it fails to break down and stops at about 115.77 and then rallies to a new recovery high, that's going to be very bullish. On the other hand, if it breaks below the 9-period exponential moving average support at 113.68, then it's tough, because it might try for 114.64 again, that magnet of the 200-period moving average. But you know what? That's going to be tough to pierce the second time if it drops much sharper. So, away, was that a question in the den? Away is home away. And this is a funny one. I've got a G/C peak at the top, the most recent top. I wanted to give it the benefit of the doubt of calling it a C. I can't really do it now without, I'd be pushing it. I don't push these things. It either does it or it doesn't. And at the same time, it's making that narrow, in this case, an expanding wedge. It's almost like a channel. And it says that if it's able to break above, it's away is home away Inc. at 30.50. If it's able to take out 31.60 and close above it, then there's a chance it could work its way slowly up to the doji candle high of 34.09. But the weekly says peak D, I need a little bit of a rest. Still very strong MACD and stochastic. So I'll be watching this. Hey, thank you. That was a good one. Now, when I look at, there was Siri was a question, and here's another one, Bud. So we'll look at Bud. And it was great to hear Bud the other day. Bud Ross used to be with us, now retired. 325. So, okay. Siri. Yeah, I think Siri looks very interesting here. It's making the dreaded H pattern in the weekly. The monthly is at a peak E. I've been watching this so closely. I get nervous about its sudden moves to the upside that don't follow through, which it did earlier back in November, December. Now, when it has this nice, beautiful candle, it has a move to the upside. You know what I'm going to recommend, Angie? Oh, that wasn't Angie. That was Zip in the Den. I think he added that one as a bonus. Let me find it. Well, it doesn't matter who it was. I think it was. If you want to nibble on Siri, 303 right now. It had a high. I didn't know how to call this. I think it's A, B, C. I've got it. D. This was an up arrow. That was the up arrow right there. Okay, A, B, C. That's what I originally called it, and then I changed it. No, this is very clear. This is a flat base restart. Went to C, went to D, and now this is a bounce. Yeah, this is a bounce. I'd be very careful. I'm not sure about it. I think it has to do a little more testing. I wouldn't be surprised if it needs to get back to 288. But I'm going to make the recommendation that if you're watching this really closely, it's a nice percentage gain if it works, and if you're able to take a tight stop. So it's at 303 right now. If you were to put a stop of 299 to 298, 6 cents. So what is that? 20%. Well, if you're not thinking percentage terms here, but you're thinking about a move to the upside that could garner you some really nice gains, that would be on the percentage side and the upside. I would just nibble at it here, and the moment it starts to hit 309, if it does that, it really must get to 310, 311 very quickly. And just raise your stop and make it a break-even trade. If you're in it and it can go up 4 cents from here, 303 to 304, I would say that that's the trade for me. I'm watching it. I'm not happy with the weekly chart. And to tell you the truth, if you had to say to me, what would you do? I'd say this is the one time that I'd actually either just take a tiny position more as an intellectual exercise than as a trade. I think there's something going on right now. It must be talked about. It's going 303, 304, 305, 305, 304, 303. So something's there. There's a story. If you had to ask me what would I do, I'd probably say, I think I'd give it a miss. I need to see it get some strength and clear 309 to 310, and then a little bit of a pullback, and we can see if that's going to be a big move. BUD, B-U-D. So this is BUD, Anheuser-Busch InBev, S.A. Did they buy the South African brewery, InBev? Did they buy not UnBev, but InBev? Did they buy the brewery? I think they did. South African brewery. That used to be the biggest brewery in South Africa when I used to live there. So there's a doji candle at the high of 101.59. This is a great question. What would you do? I'm going to ask if that was that Angie that asked me the question. Things are moving quickly in the den here. Let me just double check. Bud. Yeah, Angie. Yeah, do you have a position in this? Let me tell you something. There's a completely different attitude I would have. If you are holding this long, let me explain to you. BUD is trading at 99.16. It's up $1.57. In this environment, the stocks that are working are telling you, we are the stocks that are working. The ones that aren't working are saying, we are the stocks that are not working. But I have to put a down arrow here, even though it might not be a top of consequence, because the stochastic did go under 80% and the MACD turned down. But I like it when the MACD opens up, and that gives you a confirmation. In this case, it's flattening out. So this is what, there is a divergence. Divergence between the on-balance volume, a divergence between the relative strength, a divergence between the stochastic here, and then let me put that in. That's a nice exercise. Let's do that right now. When there was peak C right there, and yes, peak E, we'll talk about divergences, because this is an educational program, and we'll talk about the educational divergences. But we're also going to talk about how divergences sometimes aren't seen by the divergee. It's us that see it. We want it to see it and to respond in the right way. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the 3 o'clock to 4 o'clock edition on April the 8th. And the Dow's up 32, and S&P's up 785. Now, it's so fascinating because this morning in my opening call, my Traders Corner, we have the DXD, and we're probably going to be taken out for a small loss. And I had it for a number of reasons. But most importantly is I thought the DTM, whenever there's a market that refuses to go down the way it did on Friday, the trade would have been to buy the dip, the second dip this morning, the deeper one. And the reason being that if you are looking at a trade, you really have to, the percentage might not be big, but you want to get in at the right price. And I thought, well, I'll only have a confirmation if the Dow closes above the doji candle that I showed my subscribers, above the candle of yesterday. Well, at that point, it's kind of late. That high was 14,606. We're at 14,602. So I'd have to wait for that. Why? Because there was the possibility of a U-shaped formation. So that's the reason why I try to lighten up, this is a really, this is the difficult market in that, you remember that back in 2008, was it? You remember there was a period, was it 08? I don't remember. There was a period where we moved 400 points up and down And we varied it up and down every single day for like 5 or 6 days. It was almost, I had never seen that ever before. Well, this is the first time we've had 13 or 14 consecutive quite big days on the upside, the downside, the upside, the downsides, with the direction changing like that. And that's telling you the whipping. You know, I always think of this. You know, when a dog goes in the water and then it comes out and everybody's standing around talking, and the next thing you know, it's splashing away, it's shaking its body, couldn't care, it doesn't know, it just wants to get the water off, and it's shaking away, and all that's happened is it's standing still. It's really not even moving, because the way it gets to shake like that is to stand absolutely still with the forelegs spread out like that, and shake, shake, baby, shake. And then you look around, it's the same as the rogue wave. That's 12 o'clock is the high tide, 12:06, the wave splashes up, and you look around and the waves are going back down, because that was a rogue wave. It didn't see the sign at the beach that said high tide at noon when it went there at 12:06. What's happening now? This is really quite important in terms of character of the market. That low trend, which is at 13.41, the low VIX, and that to me is the most important thing. Now I'm going to be talking about all of this comes Wednesday at 6 o'clock. 6 o'clock till 6. It will take about an hour to have a workshop and question and answer, and I'll talk about the tides and all that. I want to talk with you, and I want to talk with you before and talk with you after. But they're at the in San Francisco, which I'll be leaving tomorrow night, and I'll be there late in the evening, and then I'll be doing my show. Hopefully everything works out that I can do the show Wednesday morning. But I will see you Wednesday night. So sign up. I need to know how many people are coming. Please, please, please. I need to. The Marriott's been unbelievably kind. Put me up, give me a room. I owe it to them to be able to give them to good figures. So please go to the front page, sign up. All you need is just to sign up so we know you're there, and I can tell them the number of seats accurately. That's number one. Number two is I will be giving away a CD, but you need to be signed up to be able to get that. It'll be all done through TFN. I'm going to be the only one there. I won't have time to do anything. I want to spend as much as I can, market-wise and meeting-wise. So that's going to be important. And the other thing is that the question about BUD, I'm going to watch it closely. I'm not going to do anything now, but something tells me that it might have just made a top. And I think, Angie, you have your eye on a short position. I think I'll do a little homework on this, and you might be right. Look at those divergences. Stay tuned for the Tom O'Brien Show. It should be a great show with Tom. As always, 4 o'clock till 6 every day. And I will be back tomorrow morning. Have a great evening. Basil Chapman signing off. The Dow's up 42, S&P's up 8.